What's up, cryptocurrency traders and investors? This is Hugh, and in this video, I'm going to show you the baseball cap chart pattern. What's a baseball cap, and why should you care? Well, the baseball cap is a chart pattern that I've noticed that seems to signal when a currency pair is going to move, or a cryptocurrency is going to move up. And of course, this doesn't work all the time. This is, again, as traders and investors, there are no guarantees, right? And you're just looking for little clues to tell you when you should buy and when you should sell. And there's no 100% guarantees, but if you look for these patterns that work more often than not, then you have a good chance of making money. So one chart pattern that I've noticed is the baseball cap. And what is the baseball cap? Well, first of all, let's take a look at the current cryptocurrency market, right? So this is a very new market. Most people don't know how to even buy some Bitcoin. So it's a very illiquid market, and there's going to be the markets are going to be susceptible to a lot of hype, a lot of news, and they're kind of like penny stocks. A lot of this technology is not really proven yet, but people can see the benefit, and if they can deliver on this technology, then the benefits will be tremendous. So a lot of hype, a lot of pump and dump. So what you're looking for, in my opinion, as a trader and investor, I'm looking for a good place to get in long, right? I don't want to deal with margin. I don't want to go short. I'm just looking for a good place to go long and get a good value. And so that's where the baseball cap comes in. So the baseball cap, I wrote about this on my blog, but I'm hoping that this video gives you a little bit more detail on the chart pattern, right? So the baseball cap is basically this. Price gets pumped up, then it drops off, and then it stabilizes. So this is this is the top of the cap. This is the bill of the cap. And then it starts to move up. So why does it do that? Well, obviously I don't have all the answers, but in my opinion, it's because there's so much hype and there's so much excitement around cryptocurrencies that price is going to pop on any kind of news or any kind of new developments with a certain coin, right? So price is going to pop, and obviously in any market, this type of growth is not sustainable, right? So people are going to get in up here. They're going to have that fear of missing out, FOMO, and then price will start to cool off because it can't keep going up forever, right? So it'll start to cool off, and then it'll base out. It'll create this base or the bill, and that shows that there's people aren't selling their cryptocurrency. If they were, then price would continue to go down. But when it bases like this, it shows that okay, there is some interest. This is kind of the bottom, of this move, of this baseball cap move, or potentially the bottom at least. And this is potentially a good place to get in because things have stabilized, the hype has cooled down, and people are starting to accumulate, right? And slowly, the smart money is getting back in here. And there may or may not be volume spikes here. For example, this was a good volume spike here. Let me zoom in. There you go. So as you can see, price dropped heavily, and then you see this big green volume spike, and that was a pretty good indication that the price might move up, right? But if you waited and you just saw this price action here where price started to base out, then that was a better indication that okay, that might be a good baseball cap level to get back in. And when you look at the Bitcoin chart, this happens over and over. Same thing here, right? Boom, comes up, bases out, and then it starts to move up again. Same thing here. Big move up, basing down here for a while, and then boom, explosion. And then, let's see. So there are a lot of examples in the Bitcoin chart. However, if you look at the current Bitcoin chart, it does not display that as much. And the reason I believe is because Bitcoin is becoming more and more used, more and more traded, more and more people are getting involved in the public. And now the price action is starting to look a lot more like like a regular, liquid stock or a liquid currency pair. So that's why you won't see this too much anymore. However, in this case, there was sort of that pattern. It wasn't as nice, but it was the same thing, right? Run up, drop, big volume spike here, start to base just a little bit, and then you get the move up again. So let's take a look at some other pairs. You might think I'm talking out of my ass, so let's take a look at some other stuff. Ethereum, you get the big run up here, big drop off, starts to base out, and then it does the same thing over again, base out, and this looks like it failed a little bit. So who knows? But this level might hold, so we'll see. But it's a similar concept, right? It's not as pretty as the other ones, but Ethereum is a very heavily traded cryptocurrency, so that's why you're going to get, as more and more people start trading Ethereum and buying Ethereum, you're going to get less of that baseball cap formation, in my opinion. Okay, so let's take a look at something else here. Dash, right back here, right? You get this big pop, bases out, and then it moves up. And then here you get this big move up, and then we're still it's still in the downtrend, in my opinion. So I'm thinking if it gets down to here, about 22.25 or 225, and then it forms a base, and that might be a good area to get in. Not advice, obviously, just my opinion at this point, and things could change very quickly. So looking at Litecoin, again, there's a lot of volume in Litecoin, so you won't get that same massive baseball cap pattern, but you can see that kind of here, big spike up, basing out, and then it kind of failed to break out. So we'll see what happens here, but this could just be part of the base. It's maybe a wide base. Let's take a look at some other things. Neo, not enough price action there. Here's Zencash, so same thing, right? Boom, fell off, based out, and then you had that explosion. Factum, same thing here, right? You've got this blast off, basing, take off, blast off, pretty wide, really wide base, and then you had a decent move here, and then price dropped off, and then now you're in the basing area, right? So who knows how long that's going to base, but if you are looking for a place to get in, you like Factum, you like the fundamentals behind Factum, which is the most important thing in my opinion, then if you 1250 or so at the bottom of this basing level could be a good place to get in. Not enough data there to make any decisions. OMG, it's still, I don't know if it's going to base, but you get that rocket ship here, and then it's cooling down. So I wouldn't call this a base yet, but we'll see what happens. But similar price action, right? Lisk, same thing. Boom, not really a base yet, no bill. So nothing doing there in my opinion. Waves, really choppy on waves. So this is a pair that this pattern probably doesn't work too well on. You can see it a little bit, but it's not that pronounced, so I wouldn't use that strategy for waves. Stratus, yep, same thing here, right? Blast off, coming down, probably basing down here somewhere. So just wait for that basing pattern to appear, and then try and buy at the bottom of the range. And then so I mean, if you look at most of the charts, that's kind of the pattern that you get, right here, blast off, base, and then takes off again. And then this one didn't base too much, but same thing, takes off, and it comes down to the previous support level, and then it kind of forms not quite a base, but it's it formed this double candle here, and then that was the blasting off point. So obviously this isn't going to work for everything, and it's not going to work on every chart, but if you look for the pattern, this gives you a much higher probability that you're going to get in at a price that will allow you to make money, right? And if you just go buying randomly all over the place, who knows if you're going to make money or not. But you want to give yourself the highest probability of making money. And in my opinion, at this point in the cryptocurrency market, this pattern is one of the best things that you can look for. So we'll just go for a few more here. This is game credits, I believe. Yeah, game credits. This could be just a really wide base over here. So getting in at $1.18 could be a good deal there if you think game credits has a future. Tether, okay, Tether is not going to have any of that because it's going to be about $1 all the time. This one, EOS. This is actually a really bad sign because it's spiked up and then it's continuing to fall. So there might not be any good fundamentals behind EOS. I'll have to do the research. I haven't done any research on this, but that could be a bad sign. So IOTA, same thing, right? Boom, taking off, and we're just waiting for it to base out here. Made safe, similar thing, no base yet. As you can see here, take off, drop. This was the basing level here. And if you got in, around here, 29, then you could have a pretty good ride. NEM, yeah, kind of. You can see the blast off base here, and then this is another takeoff, and this is probably the basing level, right? Let's see, Ripple. So same thing here, Ripple, boom, up, really nice defined base, and then now it's possibly moving into a wider basing pattern. So if you like the fundamentals of Ripple, 14 cents is probably a good place to get in. Obviously not a guarantee, but it's a higher probability. Not so much of the pattern here on Singular, so I wouldn't really trade that pattern on this chart. A lot of very indecisive price action. See all the wicks. So yeah, probably not a good pattern, not a good crypto to trade with that. Oh, here, okay, so this is a good example of a potential basing pattern, right? You got this big run up, boom, shook out all the hypesters, and then you got the basing pattern there. So just a few more, just to show you that this works across a lot of different pairs, and it could potentially be a good pattern to trade. So Stellar, I'm not big on Stellar. I had some Stellar, but I sold it. But same thing, right? Run up, shake out, and then you got this basing pattern. It actually dipped below a little bit to be sure that it shook everybody out, and then now you have room for fresh buyers, and that's what happened here, right? You got some buying action there. Coin. Oh, this is a textbook baseball cap pattern, and run up, then shake out, and then the base, and then I've actually got some Saya down here. So I like this one technically and fundamentally, but do your own research, make your own decisions. And then Doge, which is the dumbest coin ever, but it's been successful for some reason. And you get that price action also, right? The run up, you get the shakeout, and then now it's forming a really tight base. So anywhere, between, what is this, 0.0009 and 0.0007 would be a bargain level to get into from a technical standpoint. So I hope this helped. If you think that technical analysis is voodoo, it's not. It's a chart of human behavior, basically, and you don't. It's not going to work all the time, just like anything else. Fundamental analysis does not work all the time. Technical analysis does not work all the time. Astrology does not work all the time. But if you can put enough of those things together, right? I'm just kidding about the astrology, by the way. But if you can put enough of these things together, and you can kind of get a good confluence of indicators, and it just ups your probability that you'll make money on the trade. So I hope that helped. If you have any questions, leave them below. If you like this video, give me a thumbs up. Subscribe to my channel if you want to get more cryptocurrency analysis and tutorials. And that's all for now. All right, talk to you soon.